Good evening, distinguished audience. Under current market uncertainties, we have identified a timely investment opportunity, and we are recommending a buy on CPO, a defensive stock with an aggressive business attitude. CPO is one of the 10 largest stocks on the Stock Exchange of Thailand with a daily trading volume of 8 million shares. Its market capitalization stands at $9 billion USD. Based on the market price as of December 23, 2011 at 51.25 baht and our target price of 61.1 baht, there is a 22% upside, obviously a strong buy based on strong fundamentals. But before I walk you through the growth story of CPO, let me give you an overview of the business. CPO is a subsidiary of CP Group, which is Thailand's largest conglomerate. The main business of CPO is 7-Eleven, and under CPO management, 7-Eleven Thailand has become #1 convenience store in Southeast Asia, serving 7 million customers per day. Comparing to 7-Eleven in the rest of the world, 7-Eleven Thailand is the third largest in terms of number of stores and is also growing at the most rapid rate. Moving on to the revenue structure of CPO, the food items account for roughly 70% of the total revenue, and CPO plans to increase this mix even further to fit its corporate objective of being the convenience food store for Thais. Being so is favorable for the business because food products yield higher gross margin and further differentiate 7-Eleven from other modern competitors. Ladies and gentlemen, these are the 3 key reasons that make CPO deserve a strong buy recommendation. 1, it is a defensive growth stock. 2, it has a sustainable business model. And 3, our valuation confirms the attractiveness of CPO. Moving on to the first reason, CPO is a defensive growth stock with liquidity. Fundamentally, CPO sells defensive products, being basic consumer staples. We also ran the correlation between the same-store sales growth with the GDP growth of Thailand, and we found the correlation to be very low at 0.17. This implies that the revenue of the company is independent of the economy of Thailand. Likewise, the stock return of CPO does not go hand in hand with the Asia Pacific Stock Index return measured by MSCI, as evidenced here by the very low correlation of 0.2. Unlike other defensive stocks, CPO also exhibits very strong growth. Comparing to Thailand's retail industry compound annual growth rate of 6.5%, CPO's own growth is more than double of that at 14%.
Let's now take a look at the second reason. CPO has a sustainable business model. Its own growth is strongly supported by the distribution centers nationwide, its strong balance sheet as seen by its debt-free structure, its supported parent company, CP Group, which is Thailand's largest conglomerate. CP Group is owned by Thanin Jiranon, whose prominence can be compared to that of Lee Ka-shing of Hong Kong. The Jiranon family has strong political connections in Thailand, something very desirable and very important in Asia. The CP Empire owns companies such as CP Foods, which supplies food products to the Thai CPO stores, and also CP Land Group, which secures strategic location for CPO. Its supportive subsidiaries are, for example, CP Ram, which produces baked goods for CPO stores, and also Panyapiwat Vocational School, which ensures a steady supply of employees, which in turn ensures that CPO has a low turnover rate. Its franchising system also allows for the company to have lower investment and also rapid growth. This fits with a future corporate objective to expand mainly in provincial areas and using franchising as a main mode of expansion. And if you take a look further on the screens, between CPO and its local competitors in the convenient market, CPO has the highest number of stores, far exceeding those of the others, having secured all the strategic locations, which serves as the entry barrier and key success factor in this business. Also, furthermore, when you compare CPO to other players with high financial resources, CPO is the only one using a franchising system. This enables the company to extend its lead even further in the future. Nevertheless, when faced with competitors, CPO asks for its franchisees to open new stores and encircle the competitors and effectively drive them out. This allows for the company to retain or increase sales at the expense of the franchisees. So this five forces model further emphasizes CPO dominance in the market. For example, CPO has a very high bargaining power over suppliers, as seen by the negative cash conversion cycle of negative 45 days.
Last but not least, the valuation confirms our strong buy rating. Our target price of 61.1 baht is derived from two methods: the free cash flow to equity and PE ratio, to capture the long-term growth opportunities and market sentiments. Let's first take a look at the free cash flow to equity models, which mainly consists of three main components. First, the ample cash per share of 5.3 baht. Second, the 5-year projected cash flow, in which there will be a strong sales growth as a result of aggressive store expansion and continual increase in same-store sales, while the margin will increase significantly by 0.5% as a result of more food products and house brand composition. These are positive, translate to a strong EPS growth of 14.2% over the next 5 years. Last but not least, the terminal value, which accounts for a main portion of free cash flow to equity models, is driven by perpetual growth rate, which consists of same-store sales growth and perpetual store expansion.
We come to another part of the valuation, the multiples. CPO was trading between 25 to 31 times price to earning ratio during the last 10 months. We took the average of 28 times multiplied by our expected earning per share of 2.02. So we get the value of CPO 56.85 baht per share. We believe that the price to earning ratio of CPO is appropriate, as the earning per share is expected to grow at 28% in 2012, according to analyst consensus. And as CPO has a high growth, the price earning growth ratio of CPO is only 1.1 times, which is the lowest among the regional peers. This implies that the price to earning ratio of CPO is not high when taking into account the growth prospect of the company.
Having considered CPO upside potential, we also try to consider the downside by looking at the operation and valuation risk. Let's take a look at the three operation risks that will have the most impact on valuation of CPO. First, the new wholesale and retail law will limit the large retail store expansion. This will drive retailers such as hypermarket to enter the convenience store market and intensify the competition. Second, currently CPO is charging relatively high profit sharing from franchisees, which might make them dissatisfied. Third, CPO may tend to promote its own house brand item. This could create conflict between CPO and supplier and may prevent CPO from meeting its customer demand. However, CPO already has mitigation plan to counter this risk, and we welcome further discussion during the Q&A.
Moving on to the valuation risk, if you recall, the terminal value accounts for the major portion in our discount cash flow model and is primarily driven by the sustainable growth rate. So we ran the sensitivity analysis on G. And what we found is that there's only a 4% chance that would trigger a change in our recommendation from buy into sell, and in which case the loss is still very limited. On the other hand, the probability of gain is as high as 75%, and that is why we call CPO a defensive growth stock. With the three reasons of being a defensive growth stock, having sustainable business model, and being confirmed by our valuation, we have concluded that CPO is indeed a defensive stock having an aggressive business attitude. But not only that, ladies and gentlemen, we tried to be thorough and we also took a look at the downside, but the risks are still minimal. And that's why we are certain of our buy recommendation on CPO. In fact, we have been following the stock price of CPO ever since, and as of today, the half-day closing price is already 65.5 baht. Thank you for your attention, and the floor is open for questions.